Hey everybody, how you doing? It's Chris DeCanchuk, Realty Connect USA and Team CJD Homes. I'm here today with Sherilyn Hines from Valley Bank. Super excited to have her here. Cheryl and I have known each other for 10 years and she's been in the loan business a long time. So Cheryl, welcome. Thank you.
Thank you. Thanks for having me.
So tell us a little bit about yourself, how long you've been in the business, why you chose Valley Bank.
Okay, I've been in the business for about 30 years and I have a background in construction and renovation. I also do all different types of mortgages. I went to Valley because I helped them with their construction program they were revamping. And they rolled out a really great product, and when I interviewed with them, they had a lot of really amazing portfolio products that help home buyers, from first-time home buyers to jumbo to construction and renovation. And they're products that are not offered anywhere else but through Valley.
Wow. So now I work with a lot of buyers. I understand there's a lot of options for buyers and a lot of banks to choose from. So just want to get right into it and see exactly what Valley has to offer clients. So what are some of the first basic first-time home buyer programs that Valley has?
Well, we have all the standard first-time home buyer programs like Sunny May and the Home Ready, Home Possible, FHA, etc. But our two special products are our Community Advantage program and our Community Advantage Plus program. I consider them to be a preferred product for first-time home buyers. They are designed for borrowers who are making 80% of median income, and if they are doing the Community Plus program, they're designed for people who are buying in designated areas of low to moderate income. What I like about the program is the first one is 3% down with no PMI, and the second one is 5% down with no PMI.
Okay, so now is this exclusively to Valley Bank?
Yes, this is one of our portfolio products, and this goes back to what I was saying about how I love working at Valley because their products are so unique.
So you could put 3% down and have no PMI. So buyers can get into a home for very little out-of-pocket costs and have no PMIs. That's pretty great.
Yeah, it is. It's really great. And by not having the PMI, what I see is that a person's able to afford maybe a little bit more of a home because they're not having that PMI go into their debt ratios, number one, or number two, the house that they didn't want the payment to be as high, now they're willing to buy it because the payment's a little bit less expensive for them. So
okay. It's
great.
So now what are some of the qualifications to get approved for this type of loan?
Well, you do have to be a first-time home buyer, which means you cannot have owned real estate for 3 years. It is has a little bit less stringent approval process. However, we're still prudent in our underwriting, of course. And again, as I said, the no PMI, helping people to qualify for a little bit more. We do an income, credit, and asset verification like we do with all of our other loans.
Okay, wow, sounds like a great program. So let's get into a little bit about conventional loans. I know a lot of people want to go conventional. So what are some of the type of conventional loans that you have?
We have standard Fannie Mae and Freddie Mac products, and we also have our own program, which is a biweekly 30-year fix. Mm-hmm. What's kind of interesting about that is they take the 30-year payment, it gets split in half. The client makes the payment every other week, so 26 pay periods during the year. It kind of works with people who have a biweekly check. Mm-hmm. And by doing so, you are making one extra payment a year. And by doing that, you are reducing the total interest paid on the loan, in addition to the fact that it's close to 25 years, I think you pay it off in.
Okay, now when you talk conventional loans, everyone thinks that 20% down is the down payment you need to put down. Can you put down less on a conventional loan?
You can. The standard is 5%, but then under their Home Ready program, you can do as little as 3%. And they have a 97 program for people who are not first-time home buyers that they do as well at 3%.
Okay, and you could put 5 or 10% down as well?
And yes, and all of that would avoid PMI because anything that's less than the 20% down with Fannie or Freddie does require PMI insurance.
Okay. Now, I know Valley Bank has another great program that I have a lot of personal experience with. It's called Unison. So what exactly is Unison?
Unison is a company that's based out of San Francisco, and what they do is they partner with home buyers towards contributing to their down payment. They will contribute anywhere from 5 to 20%, and it helps the client to be able to put more money down. There are no mortgage payments. So what they do is
So it's not a loan?
No, it's not a loan. So what happens is they actually share in the appreciation on the sale of the home when you sell it, and you have up to 30 years to sell the home. Another important note is they're not an equity sharing. This product is not equity sharing. They only share in the future appreciation. What's also interesting is that if they lose on the appreciation, they share in the loss as well.
Oh, wow.
So a typical example of their percentage is if a client was going to put down 10% and Unison would match, say, 10%, they would take 35% of the appreciation. It goes off of the price that they originally pay on the house. So if they bought a house, say, for $400,000 and in 10 years they sold it for $500,000 and they were at the 35% appreciation, they would be paying their initial deposit back to Unison plus another $35,000. That's just an example. What we recommend is that the clients go directly to Unison because we are not affiliated with them. We do work with them because we are an approved lender that works directly with them, but they do need to go for counseling directly with Unison.
Okay, how easy is it to get qualified for this program?
The steps generally that we follow is that if they qualify for a mortgage, on the credit and income side, generally they're going to qualify with Unison. However, Unison does look at the properties. So the properties are reviewed just to see that they like the property. They don't typically like foreclosures, or there's sometimes where they do them, but there's certain things that they have to review them on their own. Like they're not going to do maybe a horse property, something a little bit unique. They may not be willing to do, but most of the properties that I have worked with have been approved. So
on average, how much could a buyer save? Because I know I have some personal experience with this program, and a few of my buyer clients have used it, and
Sure.
they saved a lot of money on the monthly payment. They have no PMI, and with the down payment difference was huge, and also allowed them to compete in the market. Where if you have a higher end market where buyers are putting down 20, 30, sometimes 40% down, that allows a 5 or 10% down buyer to compete in that market. So, and my buyers usually saved on average $700 to $800 with what I have experience with. So that pretty accurate?
Obviously the amount of savings depends on the size of the loan and purchase price. What I can tell you is the lower the loan, the lower the payment, because your interest rate and your loan amount is what computes your monthly payment, obviously. And in addition to the person who's putting down 5 or 10% is paying PMI insurance. So the savings can be quite a bit. And again, we're negotiating on homes, especially in the higher end market. I noticed that, sellers are looking at how much is being put down on the house. Sometimes they want to see more money put down in higher end markets, and when they see someone putting 5% down versus 20% down, they might be more willing to take the 20% down buyer. By doing Unison, you now become a 20% down buyer.
Yeah, one of the things I know from experience, from what I've been told by past clients, that the training course that they have is super easy. It was very painless, and they were able to get everything done within a reasonable amount of time. So I know it's a great product.
Yeah, it really doesn't hold up our underwriting at all, I feel. They move right along with us, and the money is wired at the closing. It's a great experience so far with my clients.
Now let's switch gears a little bit, because I know that some buyer clients want homes that may need some renovation. So what type of renovation loans does Valley have?
So as I said, when I went to Valley, I helped redesign their construction loan program, and the whole purpose was to make it consumer and builder friendly, as well as offer a one-time close, which is important for construction and renovation loans. So we would do ground up, which is purchase of land and construction to build, either stick or modular, and we also do renovation under that program as well. During the time that the loan is in construction, so say 12 months, the client is only making interest-only payments during that time. When the CO comes in, then the loan converts to principal and interest and taxes and insurance like they would normally pay. So it's
Other
great.
rates tend to be higher on these type of loans?
They can be slightly higher on a construction loan, and industry-wide they generally are, from my experience.
Okay.
And we also do the Fannie Mae Home Style. That is available as well to primary residents, second homes, and investment properties that are going to be rented. That's another renovation loan that we do, and that's through Fannie Mae. That goes to Fannie Mae limits.
And typically they fund the entire renovation?
So with a home style loan, they will do up to 50% of the value of the house. So if the house after completed was valued at say 600, the renovations would not be able to exceed 3 in that scenario. So, but basically, usually people that are doing home renovations that are smaller are going into the home style. Bigger renovations I'm putting in the construction loan because it makes more sense.
Okay. Now I know we went over a lot of stuff here, so if buyers want more information about these products, how can they find you?
I always say the best way to get me, because I'm on the road and I'm meeting realtors and builders and attorneys and clients, is to call me on my cell phone. And that number is 631-495-6331. My office is located at 740 Veterans Highway on the corner of Old Willets. That's in Hauppauge. And I have my assistant Christine working over there as well. You can email me at chines@valley, VALLEY.com. And that's another way to get in touch with me. Or by always call Chris DeCanchuk, because he knows where I am usually. We connect just about every day and follow up with each other. We're, I feel, a really good team. We've been working together many years. Chris has gotten nothing but rave reviews from clients that love, working with him.
Well, Cheryl, thank you so much for being here. I know we went over a lot today with some of these home buyer programs, but if you want more information, contact either Cheryl or myself. We'd love to get you pre-approved for that next home purchase. So thank you so much for watching, and Cheryl, thank you so much for being here.
Thanks for having me.